With mortgage rates rapidly dropping over this last month, let's take a moment, let's look back at November, see what sort of stats we can find here in this Las Vegas market. If this is your first time here, I'm Bryce Edwards. We post a lot of real estate content on this channel. And if you're watching this video and throughout it you say, hey, I'd like to get a hold of Bryce, maybe talk about my specific situation and see how these numbers might affect it. In the first link in the description is a way to contact me, choose a time that works for you out of my calendar, and let's do a one-on-one like a Zoom like this, or we can just jump on a call where I'm not distracted with something else and I can focus on the call itself. So as I mentioned, mortgage rates have essentially been dropping the whole entire month. We started the month off around 8%, and now we're all the way down to 7.09 as of December 1st. And that is looking at Mortgage News Daily. I use one place to track all my data just so that it can stay consistent throughout all of my videos. So if this is your first time here, or maybe you're a returning person, let me just remind you how we break this market up is we do 3 different segments. We do the general housing market, we do the high-rise market, and then we do the luxury market. And differently this month, I'm going to go a little bit quicker through everything. I'm not going to talk as granular about each thing. So like I said, if you need something that's specifically tailored to you, either drop a comment below or schedule a time with me below. I should quickly mention that if you want to see just one section of it, or maybe if you want to just get my final thoughts on everything, there will be timestamps below. You can just jump to that section in the video and go from there. So let's jump into these charts right away. This is going to be for the general market right now. So this first one I pulled directly from the MLS. It's the last 7 days of activity. You won't see a lot of this data online, so this is helpful here. I think the main theme we're looking at right now is price decreases. This could be people that want to close before the end of the year, and they could be a little bit more desperate. As I always talk about, there's a lot of gaming of the system when it comes to these sort of stats. You can have a lot of people pull a home off the market and relist it at a different price. Or a lot of these price decreases, I know some flippers here in town that are doing this quite frequently. They're knocking $1,000 off, every once in a while. So it's not a substantial decrease, but it is people being more desperate. Let's look at the sales price average. This went up a little bit for this month. I don't think that's a big concern because we did just have a $25 million sale close a couple of days ago. So that's definitely going to skew these numbers a little bit. So I think in total, we're probably about median there. So number of sales is what we're looking at now. And as you can see, the trend continues that we're getting less and less sales. This is probably a little bit of seasonality. This is also not reflecting any new home sales, which is worth mentioning. The only new home sales that would be showing up on this would be if they put them on the MLS. And I've been pushing people to look at new homes a lot lately. You can get a lot of incentives right now, especially as some of these companies get towards the end or the next quarter of their fiscal years. Number of listings, this is just looking at how many people are on the market. So really it stayed consistently pretty flat. So we're sitting right around the same range. And then months of inventory. This really tells you if it's a buyer's or a seller's market. As you may know, 4 to 6 months is about where it's a median market. And there's degrees of it. I mean, if you go too much below the 4, then you're going to have a seller's market that's going to put upward pressure on pricing. If you have it way above a 6, then you're going to have downward pressure on pricing because it's more of a buyer's market. So there's always degrees to this, so we're still sitting at a fairly balanced market on paper. And then one of our last ones here is we're just looking at the average days to sell. Think of this as days on market until it actually closes. So we're sitting here right around 30 to 35. I think that's a pretty healthy number. It means that if you put a home that's appropriately priced on the market, it's likely to sell within an ordinary amount of time. So the last one we're going to look at is just the months of inventory historically over the last 10 years. One thing I wanted to point out here, you see a lot of seasonality actually in these markets, especially when it was normal years where there wasn't huge highs and lows of mortgage rates or any pandemics going on over here. You really saw that it goes up and down just like we're seeing a little bit right now. So it's not going as high as it was, in years past before COVID, but it is going a little bit up and we'll see where this goes, especially as rates continue to go down. Now, one quick thing I wanted to throw in here when it comes to the single family market is I wanted to pull some different data that I thought might be useful. If you think it is, let me know. So this is going to be looking at the split between the homes that are currently on the market with where they are as far as how many are vacant. So we're looking at 4,577 total homes on the market. And then of those, 2,281 are vacant, 50% of those. And then there's 477, about 10% that are tenant occupied. And then 1,818 are owner occupied. So as you can see, most of our market right now is vacant homes, which is very interesting. if you can find one of those, maybe you have a little bit more purchasing power where you can make a more aggressive offer. I think that's something to keep an eye on going forward, but you guys let me know. And then the last stat I wanted to share with you is just looking over the last 90 days. I wanted to just look at how many of these deals transacted for cash and how many of these got a loan. So in the general market, we had 4,832 homes sold over the last 90 days. And of those, 1,277 were cash, which is about 26%. So I think that tells us in this high interest rate environment, a lot of people are still choosing to finance these homes. It's not everything you read online where everything's selling for cash from people in California. But really, I think maybe people are buying down their rates at closing, which I recommend to a lot of people. Or maybe they're just buying now in anticipation of rates going down next year and the year after and refinancing then. So now let's jump right into the luxury market. We're moving right along. Like I said, I want to make these a little bit shorter just because I think there is a lot of data, but I think a lot of people can just pause the video and see what they want to see. So let's jump right into luxury data. So this is going to be that same thing, the last 7 days from the MLS, looking at what's been going on. And as you can see, price decreases and new listings are really what's showing up here. As I mentioned, the new listings, a lot of those are people unlisting a home and then relisting it just to get a new home on the market. Unfortunately, they don't track this like they do cumulative days on market, but this is what it's showing currently. But price decreases, there's a lot of those happening, even if they're very small numbers, like 1,000 or so. And it's worth mentioning, probably a lot of these sellers are trying to get deals done before the end of the year. Now we're quickly just looking at the number of sales in the luxury market. So as you can see, it's been slowly going down, but nothing like we're seeing in the general market. It's still staying relatively strong. And for clarification's sake, all of this is 1 million plus is how I define luxury here. So as I said, it's not going down as far as we're seeing in the general market. There's not been as much of an impact on rates. So that's good to see for this market in particular. Months of inventory, this is just going to show us what we should expect as far as if it's a buyer's or a seller's market. I think we can all strongly agree this is a buyer's market right now. 4 to 6 is the range for a balanced market. Above that, we're now sitting in an area where there is downward pricing pressure a little bit on these sellers. And you can maybe snatch a deal right now in this high interest rate environment. If we look at this historically, this is over the last 10 years of months of inventory, you can see we're still relatively very low compared to where we normally are. You can see a lot of the seasonality as January comes around each year, and we're getting a little bit of that right now. But as far as where we used to be in Vegas, we're definitely much lower, and there is more demand for luxury properties right now. So days to sell, think of this as days on market. If you appropriately price your place, how quickly should it sell? We're sitting around 60 days. I mean, I've seen plenty of places that take 180 days. So this is good news for a lot of people. It's saying that even in this interest rate environment, it's not going to take you 100, 200 days, because a lot of times when you buy these luxury assets, it's sometimes hard to liquidate them. And that's not what you want to see, but I think we're getting a lot of traffic from other states to Vegas. Average sales price, I don't look at this one too much because, as I've mentioned in other videos, as appreciation happens in the general market, more and more homes get pushed up to that $1 million price point. So there just happens to be more homes sitting in that $1 million to $2 million price range over time. But as you can see, we're trending up a little bit. That's likely due to the $25 million sale that just happened in Spanish Trails. But we are trending up slightly. I think it's probably holding steady as you can look for the whole year. Active number of listings, this has been very level as you can see for this whole entire year. So essentially no movement in that regard in terms of what's going on in the market. And then we're looking at number of sales. So as you can see, this is over the last 5 years. And what we're seeing right now is it's definitely been heading down this year. So we're in line with where it was back in like 2021, middle of 2020. So it's definitely been going down, but when you look at years like 2021 going into 2022, that was an uncharacteristic market, so I think that's to be expected in a higher rate environment. Now, the last stat I wanted to share with you is I just wanted to look over the last 90 days that are sold and tell you how many sold for cash and how many got a loan. So of the last 90 days, 269 sold in the luxury market, and of those, 133 were cash. So 50% of those essentially were cash deals that closed. And if you follow any of the news or if you follow a lot of financial advice, you might know a lot of people buy in cash and then refinance later to get their money back out. But at the time of closing, almost 50% are in cash right now for the luxury market. Okay, so our last segment here, we are going to be looking at the high-rise market. So this one, as you can see, I think the main thing here is there's actually been a little bit more activity than we've seen in some of these other markets. When you look at the under contracts that you can still show and then the no-shows, there's a decent amount. I mean, we're absorbing more than there was listed in the last 7 days. You also see a lot of these price decreases. I will say there's been a slowdown in terms of how many places are selling, but at the same time, there's also a little bit of seasonality slowdown in how many places are getting listed. Sales price average, so we're looking at anything high rise here in Las Vegas. I would say over the course of this year, it's been relatively flat. It's going down slightly in November. I don't think it's enough to really make any sort of assumption off of, but that's where it's currently sitting. So now we're just looking at number of sales. So I would say we've seen a lot more volatility in terms of this year, in terms of what's actually selling compared to some of these other markets we've discussed in this video. So we saw at the beginning of the year, sales really ramp up as we went into the summer, and then they cooled off as interest rates hit a little bit higher, picked up slightly, but now they're back down again. So I think this is probably a little bit normal. We're going to see what happens with rates going forward. This is just number of listings. So it's still relatively flat, I would say. We've seen maybe a slight downward trend going into November, December, but that's likely due to a little bit of seasonality. Months of inventory, this one tells us if it's a buyer's or a seller's market. 4 to 6 months is our range for a balanced market. So sitting here at 7, just like we were last month, you would say there's maybe a little bit of pricing power that you have as far as a buyer. You can actually press on that price a little bit more, maybe get a little bit better of a deal. As you may know from watching some of my other videos, I'm a huge advocate of buying in the winter months because if you can get a place under contract, you're likely saving some money compared to when everybody else is buying come March, April, May. List price average, so this is showing what we are. So relatively flat over the year, maybe a little bit of appreciation in there. And this number going into November, I think it's very skewed right now because we had big places listed in the Waldorf Astoria, in Queensridge Place, and we also had a big listing in Turnberry Place. So when some of those big listings come on the market, it just inflates the average list price. So it's not actually representative of what's going on. I think we're relatively flat. So this is our days to sell. Think of this as days on market until you actually get it under contract. So as you can see, it's been trending down for most of the year and we're continuing to trend down again. I think if you price a place appropriately, I think you're able to get it under contract, not as quickly as you are a general home, but quicker than you are a luxury home here in Las Vegas. Lastly, I just wanted to look at the months of inventory going over the last 10 years. So you can see a little bit of this seasonality like we've seen in some of these other markets we've already talked about. You see in January a little bit of a spike every single year. And then you have obviously some big distortion that happened during the COVID pandemic. But as you can see, I would say we're a little bit lower in terms of months of inventory than historically standard for us. Lastly, I just wanted to look at some data I pulled. I don't usually include this, but if you guys are finding this interesting, I'll start including it from now on. So for the high-rise market, there was 329 total listings on the market. And of those, 213 are vacant, meaning that 65% of the homes on the market or the high-rises on the market are vacant right now. In addition to that, we have 50 that are tenant occupied and 67 owner occupied. So that really means that in this high-rise market, a lot of these places are sitting vacant without anybody in them. That might be more of a buyer's advantage. And then the last stat I wanted to share with you is in the high-rise market, looking over the last 90 days, how many of these deals closed in cash? How many of these people obtained financing? This is a particularly useful stat when it comes to high rises because if you've watched my full-length guide on high-rise buying here, you know a lot of the towers are very hard to get loans in when it comes to construction defect litigation, when it comes to the short-term rental market, or when it comes to if it's a condo hotel and you're sharing amenities with other people in there. So over the last 90 days, 180 high-rise units have sold, and of those, 107 are cash. So 60%, the majority of sales are still happening in cash when it comes to high rises. So to wrap up the video, what would I take away from this? I would say most markets are relatively flat right now. There's not much changing, even with interest rates going down slightly. I think it's worth noting that if you're maybe a homeowner now, you would think that as a seller, you're looking at old data already, and a lot of them are very reserved to get off prices that they've seen sold earlier in the year. So a lot of these sellers are a little bit slower to adapt to current trends. So there's going to be some pushback on any sort of downward pricing, especially as we see interest rates continue to fall. I think it's also worth mentioning that this is just the macro view of all of these markets. In these micro markets in certain areas, it's going to be vastly different. There's going to be places in certain high rises that sell way quicker than the average. There's going to be some that sell for way more. So you need to know those micro markets, and the same goes for homes. There might be places in the ridges that are much more desirable, whereas you go a little bit down the street and it's a similar model, but it's not selling as quickly. So you really have to know those micro markets. Your local knowledge is what really sets people apart when it comes to buying these sort of homes. So I hope you enjoyed this video. I'll catch you in the next one. Please consider subscribing and give us a like on this video.